And hello traders, and welcome to another video. So in this video we are going to talk about backtesting. Okay, so yeah guys, I'm just gonna show you the process of how you can backtest the strategy, what are the things you need to do, and yeah, just everything about backtesting. Because again guys, after you have watched the education, after you have done with all the videos, you should first, most important thing is to backtest the strategy. So as I explained, you are going to gain confidence in the strategy that you're using. If you have not backtested the strategy and you're using the strategy, you know, the hard times maybe are gonna come. You're gonna have a couple of losses, and then you're gonna have doubts. Okay, you're gonna question yourself, you're gonna question your trade plan, you're gonna question your trading, you're gonna question everything. You're gonna be left in doubt. You're not going to know what are you doing wrong, what are you doing right, and all those things. And this is why the backtesting strategy is the first and single most important thing that everyone should be doing after they have watched the education. Okay, so again guys, you are going to be able to, see that strategy is profitable. So you are not going to believe me and what I'm saying. You are going to see that for yourselves. This is going to allow you to build a confidence in the strategy. Okay guys, because again, remember, when we are trading live and we are trading especially on bigger capital, you are going to have emotions. You're going to have a little bit of fear sometimes. Maybe you're down 5% or something like that. You're going to play under the gun, and then you're going to see a setup and you're going to be like wondering, do I take it or do I not take it? That's wrong. You should not trade like that. You should know if that entry, that specific entry criteria, is in your trade plan or not. And you're not going to be able to make a trade plan in first place if you haven't done your backtesting. So again guys, backtesting is going to help you tremendously in your trading journey. So imagine this, okay? So you have basically one box that you can go in that box, and imagine that time in the real world is frozen and you are in that box, because let's say for example time moves slowly in that box. Okay, so just imagine, fun little thing so I can explain better, importance and advantages of backtesting. So in that box, you go in that box and time moves slowly. So in the real world, the time is frozen or something like that. It doesn't move, and you enter that box, and let's say for example you want to train, I don't know, jiu-jitsu or something. You're gonna train there like years and years. You're gonna spend years and years like in that box, and you're gonna come out and you're gonna beat all the competitors. You're gonna be in advantage because time moved slowly here, and in that box you spend years there. I don't know if I give the right example, but it's basically the same thing as backtesting. There are people who are trying to trade live, trying to learn from their mistakes live, trying to figure out the strategy live, etc., and that's really dumb thing to do. Okay, this is why backtesting is for. So you're gonna go and backtest everything. So all of the mistakes that you have taken live, all the lessons that you would learn the hard way, you're gonna learn through backtest. You're gonna get to know the pair that you're trading. You're gonna get to know the nature of the pair. You're gonna get to know what works on the pair and what doesn't work on the pair, because again guys, all the pairs are different. So there are endless advantages of doing backtesting, and just imagine how much heads up you're gonna have and how much advantage you're gonna have over the people who are, over the traders that are not backtesting. So you are going to be able, let's say for example, you're backtesting 1 month a day. So you're just starting out. So let's say you need 1 hour. 1 hour a day, 1 month a day. Okay, so 1 hour a day, 1 month a day, you're doing your backtesting. So in 12 days, 1 hour a day, you are going to finish a whole year of price action. So this is what I mean by box and time capsule. So there are traders who are gonna trade for the whole year, 30, 65 days in whole year, and you are going to do that. You're gonna backtest everything in just 12 days if you manage to do 1 hour a day. And that's only for the beginning. You're gonna see that backtesting goes fast as you move on, as you learn the strategy, as you learn everything. It's gonna go like this. You're just gonna backtest. So again, you are going to be in major advantage over other traders who are not backtesting. Again, you are going to build a confidence in the strategy. So you're gonna have a losing streak, but you're not gonna be affected on that. You're not gonna be like, oh, my strategy doesn't work, I should, find something else. There's a big problem that people do not backtest, and then they are successful with the strategy for a few months, and then they have a losing streak or something, and then like the shiny object syndrome kicks in, and they're like, oh, this strategy is also good, let me change it. You're never gonna find consistency if you do that. If you jump to strategy is the worst thing that you can do. So again, guys, after you have watched all the videos, this is the single most important thing that you should be doing, and that's backtesting everything. Because with backtesting, you're gonna be able to make a trade plan, to do your ASR, and then with that trade plan, you're gonna basically trade in live markets. So again, guys, the single most important thing to do is backtesting, and in this video, I'm gonna show you how to do it. We're gonna go through 1 month of price action together, just to show you, what is the process and how can you do it correctly. So when you open the charts, let's say for AUD, USD, for example, 1 hour time frame, you're gonna see that here on the left, you have this button. It's like go to button. You click on it, and this little box is gonna pop up, and basically you can look for every month of the year that you wanna go and jump to backtest. So right now is January 2023. You can go back and basically you can do it this as well. So you want to backtest 2020 or 2021. You're gonna go to date, whatever. So you can play with it, and you can really choose on which date you want to jump at. Okay. So when you have found, let's say we want to backtest January 2021, first month of January 2021, you're gonna find the date, you're gonna write it here, and you're just gonna click here, go to, boom. And you're gonna see that all of a sudden chart has disappeared, okay? And you should not find it, you should not try to find it like this because it's gone, okay? But you have here on the right, this little button that says auto. Click on auto, and automatically you're gonna see that here is 31st of December 2020, and you have 1st of January, 3rd of January here, 21. Okay, it was the weekend here, 100%. And when you're in TradingView, guys, you have this bottom here that says replay, bar replay. Click on the bar replay, and then just go and start from 3rd of January. Okay, so just click on it, and you're gonna see that price action, everything has disappeared. So this is only way how you can do your backtesting, because this way you're never gonna know what happened after. Okay, so you're always basically going to trade like you're trading live. Of course, there are no emotions when you're doing your backtesting. So, that's, you can say, a little bit of disadvantage. But again, that's the most stupidest reason that I can hear from people that tell me they don't backtest. Like, you don't have emotions when you backtest. Oh, really? Oh, you're a clever and smart boy. So it doesn't really matter, because you're gonna again have all those advantages. Leave the people who tell you that backtesting is not good. They're just lazy. Okay, believe me, guys, they're just lazy and they do not want to do the work. Okay, backtesting is gonna give you a lot of advantages. As I explained, 12 days, you're gonna finish the year. You're gonna get to know everything that happened in the full year. You're gonna get to know the pair. You can build your trade plan with backtesting. You're gonna have confidence in the strategy that you're using. You're gonna see that strategy is profitable. Okay, so there are endless advantages of backtesting, and everybody should backtest. Okay, so you basically do that. That's the process. You find the date and you just bar replay, click through the price action, and just test everything out. So when we are doing backtesting, guys, we are doing it like this. So first time when we backtest, you can start from Euro USD. Okay, so I'm gonna write down here the pairs that you're gonna backtest. So you're gonna start with Euro USD. Then after you have finished with Euro USD, you can go for Euro JPY. Okay, after you have done with Euro JPY, start backtesting AUD USD. After you have done with AUD USD, start backtesting AUD JPY. After you have done AUD JPY, start backtesting GBP USD, and then GBP JPY. Okay, sorry, JPY. So those are the main 6 pairs that we are trading, guys. Okay, and those are the most profitable pairs with hybrid strategy. Then we have Euro AUD that we are trading also as well, and GBP AUD. But first, it would be better to focus only on these 6 pairs and leave this 2 for a moment. Okay, so focus on this, start from Euro USD and then move on, and then at the end, when you have done everything from here, then you should backtest these 2, because on these 2 we don't have a lot of trades. Double confirmation entry also works a little bit better on those 2 pairs, and they're a little bit more corrective as the nature of the pair goes. So we do not have a lot of trades on them. Okay, so again, first start with the Euro USD and then move forward. And again, guys, when you're doing your backtesting, I would really suggest that first, when you're going through the backtesting for the first time, you backtest only hybrid entry. Okay, so our only hybrid entry, not double confirmation entry. Double confirmation entry is a refinement of the strategy, and it would be better to backtest it for the second time. Okay, so after you have done with original hybrid entry, you have backtested the hybrid entry, then test out double confirmation entry. Okay, that's the process. That's how it's gonna be easier for you to do things. Okay, the smartest thing that you can do, smartest move that you can make. So basically, let's say for example, you're starting out, you want to backtest your USD. What you're gonna do is you're gonna start, and usually we backtest 3 years of data. I think that's perfectly enough. 2020, so we do not backtest. Why? Because the year was, I think that's when Corona hit. So the year was really messy, volatile, corrective, and it's not really good to backtest strategy on that year specifically, because it's gonna give you a lot of misinformations. So usually we skip 2020. Okay, so basically 2022 was the same year, the similar year, volatility over the place. But again, you can backtest 2022. So 3 years of data, you backtest 2019, let's say for example, you skip 2020, and then you skip backtest 2021 and backtest 2022. So you have 3 years of data. First time when you're backtesting, you can take trades a little bit more aggressively. So really the point of you backtesting for the first time is to get to know the strategy. So your entries are, legit, they're valid. you do not have invalid trades, and so on and so on. As soon as you have done with the backtest, let's say for example you start with January, you do the month, send it in the community. We're gonna review it, and we're gonna really check everything. Maybe you made some beginner mistakes, maybe entry is not good, maybe you messed up the trade management, maybe you missed the scaling position. Okay, so those things are pretty normal when you're starting out. So send your charts in the community, we're gonna review them, and we're gonna correct you. So this is how you're gonna be able to move forward and move faster. You're gonna improve more in less time when you share your charts with us, basically. So again, when you're doing your backtesting for the first time, you can trade a little bit more aggressively. So you get to know the pair, you get to know the strategy, and really to have a lot of data, to have a lot of information. And then after you have done, let's say full year, you start with January, boom, you finish the year, then you're gonna put it in ASR. I'm gonna explain the process of ASR and trade journaling and everything, building a trade plan in the next couple of videos. But again, when you have done, let's say for example, 3 years of data on your USD, and you have backtested for the first time, and you have taken, pretty much every legit entry, not, some crazy aggressive trades, but again, you're gonna trade a little bit more so you can gather a lot of data from the first backtest. Then you're gonna do your ASR, so advanced self review on those trades, and you're gonna make a trade plan and checklist. Okay, so right now, when you have made your trade plan, you are going back on the same pair, same years, and backtesting everything again. But right now you do not take trades at random. You take trades only that are on your trade plan. So you're testing right now. So first time when you have gone through the price action, all those years, you have gathered the data. Then you're doing your SR, making your trade plan, and then with the trade plan, you're backtesting everything for the second time. But right now, you're not gathering the data. You're taking only the trades that are profitable for you. Okay, so basically, we're gonna make a profitable trade plan, and then you're gonna get and test that profitable trade plan again. So when you have done all that work, guys, for one pair, believe me, you are going to master the pair in details. So just imagine going through 3 years of data of backtesting bar replay on your USD, and then you review all those trades. You make a trade plan that it is going to work if you follow that trade plan, and then for the second time, the same pair, same years, same bar replay, you go through and backtest everything for the second time, but with that trade plan. What is that going to do to you is extraordinary. Okay, you're gonna build confidence in a strategy. You're gonna be able to learn that if you follow your trade plan, you can be profitable in the long run. It's gonna help your mindset tremendously. It's going to learn you that you're gonna have losses. Even though if you have losses, again, at the end of the day, that's the part of the game. You're gonna have missed trades. You're gonna have, trade going for 5% and hitting your break even. You're gonna see that all those things are normal. And they are really hard to deal with when you're trading on the live market. Just imagine price missing your entry for 0.1 pip and then going in profit, and you could pass FTMO challenge. Then all of a sudden, you're using your risk reward tool, you're looking at how much money you have won, you would won, you're imagining, you're beating yourself up, all those emotions are coming in you, you're feeling fear of missing out. We all have been there. You miss a trade, and then also you're using risk reward tool to calculate your imaginary profits that are not on your MetaTrader. So when you're doing your backtesting, guys, you're gonna see that all those things are normal and they're part of the game. So they are not going to affect you that much when you trade live. Okay, so I can go on and speak days and days and days how good backtesting is. Everything is backtesting, guys. So this is why it is important, and this is basically a short process on how you should do it. So again, you're taking first your USD, taking all entries a little bit more aggressive as well, so you can gather data. You have a lot of data, then you're reviewing that data, making a trade plan out of that data, and then when you have your trade plan made that is profitable, then you go on backtest the same pair, the same years, but right now with the trade plan. That is going to allow you that you master the pair, you know the pair characteristics, how the pair moves, what it likes to do, what it doesn't like to do, and what price action you're gonna trade more, in what less. So everything, you're gonna know everything basically. You're gonna master the pair that you're trading. So this is the small process that we are doing, and you're gonna do that for every pair. So you have a lot of work, and this is why, again, the single most important thing that you should be focusing on is your routine. Okay, do not start with, I don't know, 5 hours every single day, and then you do work for 4 days, 5 days, and then you do nothing for the rest of the day. I mean, motivation is a stupid thing. It's like an emotion. It comes and goes. It hits you hard and then slowly fades away. After a few days, you do not have any more motivation. So this is why you need to build discipline. Discipline is routine. Routine is habit. So you need to have a habit. Okay, you need to build that habit. So start slowly. Don't pressure yourself right in the beginning. So half an hour, 1 hour a day, but consistently. This is how you're gonna build a habit of routine, and this is how you're gonna move forward and improve better day after day after day after day, guys. So yeah, I think that's it. Let's start backtesting. I'm gonna show you how you should backtest correctly. So basically, guys, you're using the bar replay tool, and you just clicking through the price. So price action was showing us here that price action was moving in this ascending price action. Then we saw this break to the upside, price action continuing to the downside. This is 31st of December, so we would not trade anything here. So let's move on and see where was this was a market open in January. So let's see. Again, price action being a little bit more corrective, ascending price action, then continuation push up, then we are breaking these lows, guys. As you can see, we're breaking the lows, retracing, breaking the lows, retracing, and then we're breaking the highs and retracing, breaking the lows, retracing, breaking the high. It's pretty messy right now. So let's see what price action wants to do next. Pushing up. So the first trade that you will have here is this one. I mean, I'm not gonna take it right now because I know it's aggressive and it's just bad. But again, if you're backtesting for the first time, maybe you want to take it, because you want to gather that data. But for me, I know that this trade is just bad to take. Again, price action is showing us that it's moving in this ascending price action, and then we have a breakout to the downside, this ascending price action, and again breakout to the upside, ascending price action. So a little bit massive price action. For me, this indicates a longer correction. When price action is breaking the highs and retracing, breaking the lows and retracing, breaking the highs and retracing, breaking the lows, retracing, it usually indicates a bigger correction. And also you have this impulse to the upside and same impulse to the downside. That this is an indication of volatility. So when you have momentum to the upside coming to the upside and the same momentum coming back on your entry, this is considered as aggressive trade to take, coming back on volatility, going against momentum. So also when I'm trading, I know that because I'm trading USD, I know the pair. I do not like continuations. I don't like to trade continuations aggressively. So for example, if we had a reversal trade and it was coming back to volatility, I would maybe take the risk because I love reversal trades, on USD, but I don't like continuations. Okay, so I'm being a little bit careful when I'm trading continuations. So you had, this move to the upside. So you had direction on your side. That was one of the advantage. But again, volatility coming back and massive price action here. So this is why I would skip this. So yeah, it would be a stop loss. Right now we have saw this momentum, massive momentum. This is where we want to see something interesting. This is where we want to get involved in the price action. Let's see what happens. Price action pulling back. Usually when we see this impulse correction, usually we are taking down the low. Right now we have left this big wick. So usually what happens after the wick is two things. Either we start to pull back and then this wick is respected, or we're gonna see volatility coming back. So if volatility comes back to this, area, then we know price action is most likely going to be corrective. And if price action corrects a little bit, respects this wick, and then starts to break the low, then we can look for continuation trades, and we can confirm the price action wants to trend to the downside. Let's see what happened, and we came a little bit more aggressively. So it's not that this is some kind of volatility. It is not, because we had one retrace, second retrace, third retrace, fourth, fifth retraces in this momentum. But AUD/USD doesn't like this longer pullbacks. And again, this is something that I know because I have done my backtest. Okay, I have done my due diligence, I have done my work. But you're of course not gonna know this, but again guys, as you're backtesting and as you're reviewing your entries that you have taken later, you're gonna see what works and what doesn't work on the pair. So for me, I do not like to get involved in longer pullbacks on AUD/USD, only when they are high probability. So only when I see clear, clean structure, then I'm gonna have this supply zone, let's say for example, and then I'm gonna wait for a longer pullback. Only then. So for example, but in this bit of price action is showing me that it's a little bit more corrective. We have wick left behind, so I would not be interested that much in taking this trade here as well. Okay, so let's see. As you guys can see, this is something again that you are going to learn as you backtest. Okay, you cannot learn this on live markets. I mean, yes you can, but you need to wait. You're gonna wait for 1 full year so you can test some things and learn some things and blah blah blah. I mean, it's just, for me, I'm confused how people are doing it. It is way better to gather all the data and get to know the pair that you're trading through backtest, because you're gonna learn those things, what works and what doesn't work on the pair. So it's really better than get caught in the loss in a live market and then review the loss, and then you're learning something from that loss. Why you should lose money when you have a backtest? I mean, I don't know how much trading views, like $10 a month or something like that. You're gonna be able to have a bar replay to, you can backtest everything and boom, it's done, perfect. So okay, let's see what happens next. Price action pushing right now, again breaking these highs. We saw this a little bit of wick, and right now we'll pull backing. So let's see what happens. Usually price action just breaks this high as it's doing right now. So we have this impulse, correction, impulse, again correction. Let's see if we are gonna have an impulse. This candle wick is big, and as you guys can see, we just barely broke the high. We barely broke the high and made a wick. So usually what comes after is a retrace or continuation push up if the momentum is high. So yeah, momentum is here, as you guys can see, and maybe we're gonna have a trade here. Let's see. So yeah, we're gonna have maybe our first trade here. Let's see. I would be interested in trading something here. So let's see. So looking at this price action right now, as you guys can see, we have this bigger trend going on AUD/USD, that price is clearly showing us that it's pushing higher. So we had this a little bit of fake move to the downside that trapped a lot of traders into selling here, and price action just shows us that it wants to trend to the upside. As you guys can see, we had this push up that was not that clean because we had a weakness in it, but we had this retrace and then continuation push up that broke this high and broke this high, as you guys can see, pretty impulsively. So this was a pretty impulsive move to the upside. Then again, what comes after the impulse? Usually it comes a pullback. So you're gonna have impulse, you're gonna have a pullback, you're gonna have an impulse. If price action is breaking this high impulsively, then we can trade something here. Okay, so as you guys can see, we have this inside bar candle, and we have this impulse, correction, impulse. So this is where we want to get involved, on this inside bar candle right here. So this is our basically demand zone for a continuation trade. So as I mentioned, I do not like continuation trades that much on AUD/USD, and again guys, this is something only personal to me, okay? And this is why it is important to do your work. Again guys, you need to understand that we are all different people. We are not the same. That means that we are all different traders. You cannot just come and copy paste my trade plan. It doesn't work like that. Believe me, it doesn't work like that. You need to do all of these things on your own. You need to do your own work, okay? Why? Because let's say, for example, you want to copy my trade plan. And let's say, for example, I'm an aggressive trader, okay? I'm fine with taking stop losses. It's something, you know, it's part of the business. I'm cool with it, you know. They do not affect me in any kind of way, bad or good. I just, you know that they're part of the game. And you're starting out and you want to copy my trade plan. So you want to trade like I am trading. So what's going to happen when I hit, let's say, 4 consecutive losses? I take stop loss, stop loss, stop loss, stop loss. And then you're going to be like, wait, bro. First of all, I'm not good with stop losses. Maybe you're a more conservative trader. Maybe you're gonna play a little bit safer, look only on high probability trades, not be that aggressive. And all of a sudden, bam, you took 4 losses in a row. And you're like minus 4%. And you're like, whoa, what happened right now? Wait, I should stop, slow down a little bit. And then, boom, you see a 5th entry, the same entry as this 4. And then you decide, like, because you have taken 4 losses, and then you're like, do I take this right now? It's probably going to be a stop loss, and then you ignore it. But the difference is that I'm going to respect my trade plan, and I'm going to take the same entry, the same execution, because I know this entry is in my trade plan. And I'm going to take the 5th trade, and I'm going to be in profit. That 5th trade is going to compensate all of my losses that I had previously had, and it's going to earn me percentages, it's going to earn me money. And you're going to be left wondering, like, oh, look at this right now is going. And your trading is going to be messed up, okay? This is why when you're doing your backtesting, you can find what type of trader you're also, okay? So maybe you take stop losses personally. Maybe you take them emotionally. Maybe you don't deal with stop losses that good. Maybe you want to have a trade plan that you are going to trade only high probability trades. You do not want to have a lot of losses. Okay, so your win rate is going to be a little bit bigger, but risk reward is going to fall a little bit because you're not going to get involved in all the trades that, you know, the aggressive type of trader is getting involved. Aggressive type of trader is going to have a lot of losses, but also at the same time, he's going to get involved in more trades, and that means more risk reward because he's going to win more, you know. So don't get bothered if your trade plan is, I trade only high probability trades, and then you see someone else from the community or me entering some aggressive trade or something like that, and, you know, making some profits. Don't get jealous. Don't look at it. Don't ask yourself why you're not in the same trade, because you have your own trade plan, and this is why it is important to have your own trade plan, not copy someone else's. Do your own backtesting. See the things for yourselves. Because again, guys, no one else is going to trade for you. You are going to trade for yourselves. So this is why this is so important. You know, you need to do your work on your own. So as I mentioned, I just do not like continuations on AUD/USD. There are a lot of community members that are trading that AUD/USD, and they're loving continuations even more than reversals. but it's just something different. I love reversals. I'm aggressive when taking reversal trades, and I just do not like continuations, and I'm looking for a hyperbolic continuation. So I'm liking the trend right now. So if price action comes a little bit correctively on this, I'm gonna take a trade, and if it comes aggressively on volatility, I'm gonna skip it. I'm not gonna trade it. Okay, so let's see. And price action broke the high again, so this trade would not be valid anymore. So as you guys can see, price action is breaking high, retracing, breaking high, again retracing. We would have waited for this for an entry, but price action again broke the high, so this right now to trade, we're not trading it. It's invalid with hybrid entry. Okay, so again, this is how you're gonna be able to trade on probabilities, because you're always gonna execute the same pattern. This is how you're going to able to not have emotions while you're trading, because the trade is not valid. You cannot fake it. It's not valid. You just skip it, forget it, and move to the next one. Okay, let's see what happened. Price action continuing. So this is our new demand that we can trade from, but price action is showing us a little bit of weakness right now. Breaking highs, retracing, breaking highs, retracing, breaking highs, retracing. So we would need to see a little bit more momentum in order to get involved here. Again, price action coming back aggressively on this volatility. As I mentioned, this is going against momentum, and in this case, in this scenario, I just do not like it. Continuation trades on AUD USD just do not work for me. Again, personally, I do not like them. Maybe you're watching this video, you're gonna backtest AUD USD, you're gonna find continuations pretty good, they're gonna bring you a lot of percentages, and you want to take them. For me, I just don't like them. Okay, on Euro USD, for example, I trade them, I take them aggressively, but on AUD USD, they're not for me. Okay, so again, going against momentum a little bit more aggressively, price showing us weakness here. So we already know that this point of interest here was a little bit more aggressive to trade from. So right now you have your double confirmation entry, guys. So this is double confirmation entry right now. It is not valid to take with hybrid entry, but we did refine the strategy, okay, later on. And this is a new refinement. This is double confirmation entry. And again, I do not want to confuse you a lot with, you know, hybrid entry, double confirmation entry, and all of those things. And this is why I really do recommend you only focusing on hybrid entry first time when you're backtesting, and when you're backtesting for the second time, then backtest double confirmation entry. It's gonna be really easier for you. Okay, maybe you do not want to do the work for the 2 times, but again, it's gonna be more better for you if you only focus on hybrid and then add double. You do not need, at the beginning, you do not need double confirmation entry. Just forget about it. Okay, and then later on, when you build a little bit more experience, you have done your backtesting, then start testing out the backtest double confirmation entry. It's gonna be way better for you. You're not gonna get messed up. You're not gonna get confused. It's gonna be just better for you. So in this kind of examples, if I want to be a little more aggressive, I would take a double confirmation entry, because this was not safe place to enter your trades, and this is more safer place. You have a trend going on, price putting in higher highs, new higher highs, and this would be a safer entry to take your trades from. But again, as I mentioned, they're just not for me. Okay, I don't like continuations. I don't like trading AUD USD as a continuation trades. Again, it doesn't mean that you're not gonna love it. Again, I have people in the community that are, you know, trading continuations with AUD USD, and you know, they're profitable. It's profitable for them. Okay, it's like, okay, you know, this is why, because we are all different traders. You know, we have all different personalities. So for me, for example, I don't say that continuations are not profitable. They are profitable, but when I personally calculate all the losses that I take with them, it just doesn't add up in my trade plan. You understand? So you need to think in all the aspects in your trade plan. So you're not only trading on 1 pair, you're trading 6 pairs. So those losses can add up. And this is why I do not like trading continuation trades on AUD USD, because I don't like to take the losses on it. You know, I would rather take a loss on reversal trade. So again, a little bit of weakness because price action is coming back. Again, in this volatility, guys, so there's also a major factor when you're looking at trades. Going against momentum is almost never a good idea. So let's see what happens next. We're just breaking the low right now, and again, price action is being corrective, guys. There is no point in shorting here, as looking at the supply. I mean, yes, sorry, I'm sorry. This is the trade that you maybe you could take. I mean, maybe I could take, because a lot of reversals. So I forgot that this is a retrace. I thought that this was one a retrace. So as you guys can see, we broke this low, and as we broke the low, we have left a pretty big wick. Okay, so pretty big wick. Also, if I'm looking how we broke this second low, we just barely broke it and immediately retraced. And again, after the wick, what comes after the wick? If price action comes back aggressively to our block, it's not that good. But if price action comes correctively, then wick is respected. So this is something in between. This is not a volatility, but this is also not a correction, because momentum is a little bit more present. But you're gonna see that you have a one retrace here in the momentum, a second retrace, and right now the third retrace. So this is why it's considered not that aggressive. Okay, right now I'm gonna take the trade, because I trade reversal trades aggressively, but this trade is also not that good, and I do not have a lot of confidence in it. Why? Because price action just barely broke the low. We are in a clear uptrend. Price action just barely broke this low as well. We have left big wick behind, and we have moved a little bit more aggressively. So this is something that this is a reversal trade. This is in my trade plan. I take aggressive reversal trades on AUD USD, but I'm not the biggest fan of this trade, because it has a lot of weaknesses. So we can consider this trade as an aggressive trade as well, so not high probability one. Let's see what happens. And it worked out. So yeah, this is again, guys, following your trade plan. If price action took me out of the stop loss, that's perfectly fine. Okay, that's perfectly fine. This is the part of the process. It's part of my trade plan. You need to understand that you are trading a specific entry, and when you gather your data, when you have done a back testing and everything, you're gonna have, like, let's say you're gonna do your ASR, you're gonna build your trade plan, you're gonna have a specific entry that you're trading, let's say for reversal trades on AUD USD, and you're gonna know that out of 10 times when you take a trade, let's say, for example, 6 times you're gonna lose the trade. So 6 times it's gonna be a loser, and 4 times you're gonna win. So you're gonna have like 40% win rate. But again, when you win, you're gonna win big, because your risk reward is, a big risk reward. So when you win, you're gonna compensate all the losses, and your plus is gonna make money. So you need to understand this when you're trading. When you're trading on a live account, you take 6 losses in a row. Oh, it hits differently, playing under the gun, but on those positions, you're growing as a trader. But it's emotional, it's emotional, and it's difficult to think. But you need to understand that when you have done your backtesting, you know that if you execute 10 trades out of 10 trades, even though you have 6 losses, you're gonna still be profitable. So you need to execute it next time the trade comes. So you're gonna have like minus 6% loss, and boom, trade is gonna come. It's gonna be your reversal trade, but it's gonna be aggressive, and you're gonna be like, do I take it or not? What do I do? And you're biting your fingers, and you're thinking, what should I do? And then all of a sudden you have fear, and then you want to be a little bit more safer. You're not confident in the strategy, you're not confident in the entry, and you ignore it. And boom, this is the trade that made you percentages, hit you up on break even, and even give you profits. So this is why it's important to believe in your trade plan, and this is why, even though if I take a loss here, I really do not care, because I know this is in my trade plan. If I have followed my rules, follow my trade plan, I have done a pretty good job, and I do not care about anything else. Again, guys, we are focusing on things we can control, and we are ignoring those that we cannot. What we can control is our entry and our execution, our trade management, how we manage the trade. Where do we scale in the position? What happens with price action? We do not care. Why? Because it's not up to us. We do not decide what price action wants to do. Price action is going to do whatever it wants to do. So, for example, this trade is right now moving for almost 5%. Price action can easily do this right now and take me out. Perfectly fine. Part of the game. On to the next one. Okay? So, I have done everything correctly. I have respected my trade plan. Took a trade a little bit more aggressively, but okay, it's still perfectly fine. I take aggressive trades on AUDUSD. I have respected my trade plan. I have a good trade execution. I'm managing my trades based on my strategy. I have done everything correctly. I have forecast the trade in advance. I have done everything correctly. What price action wants to do next, it's up to price action. Price action will do what it wants to do. And I'm not going to be affected by that. Why I'm saying this? Because you're going to have trades maybe that you're not going to take tomorrow, and the trade is going to go, and then you're going to do this like you did before. I bet you have done it before. You're missing the trade, and then FOMO starts to kick in, and then you're calculating imaginary profits. You're looking at price action, then look at this. I would have won 5% here on this trade, but I didn't took it. I didn't took it, but I would have won it. Why? Because emotions are speaking. You know, it's funny, but again, trading is emotional business, and this is how emotions play with us. Okay, guys. So again, price action has broken this low. As you guys can see, after we have broken the low, we have this new low here. We're looking where our high is, so we can manage our trade. High is here, 2 pips above. So you're gonna see that we have locked our profits on 0.6%. So right now we could look for scaling opportunities, and yeah, just to manage our trade. Let's see what happens. Let's see what price action wants to do next. So again, this is not a retrace. Again, every low is taken over by the previous low. So this is everything in part of the momentum. This is right now a retrace, and we have broken the low. So again, this is our new low, guys, and this is our new high. So we can manage our position, and it would be like 3.3% locked in profits. So let's see what happens next. If I see another candle that is breaking, I'm gonna look for scaling here, and it doesn't really happen, guys. And even though that we are trading, when you are trading and when you want to scaling in a position, you're trading, you're scaling in aggressively. But it's the same thing as I'm telling you, when you're first backtesting, you're backtesting aggressively, but you're not gonna take the most shittiest entries out there. Like for example, this one. This is the most shittiest entry ever. So you do not want to lose, you know, minus 1% here, because you know we just barely broke the low. We made the double wick, and we're coming back aggressively. There's no point in 95% of the time, price is gonna close us out of this trade right here. Let's see, and that happened. So when you're scaling in position, you're scaling in aggressively, so you're taking advantage of the position, but at the same time, you just do not want to trade, you know, the most shittiest price action ever. So when you finish the trades, you can do this, you know, and then write something about the trade. You know, let's say for example, you know, trade was coming from a standing price action. The trade was a little more aggressive. It was a reversal. It had a little bit more negative confluences, like a big wick, and we didn't had a quite impulsive breakout. But you know, AUD/USD is that kind of pair that loves reversal trades, you know, so I took it a little bit more aggressively. So writing down, you know, the technical aspects, you know, so you know you have your technicals about the trade. Then maybe you can also write down something emotional. You know, also guys, you should be careful when you're backtesting. Sometimes you're gonna backtest too fast, and then you're gonna miss entries. And again, this is why it's important to send your analysis, send your charts in our community, so we can review it and we can tell you those things. Maybe you have missed something, maybe you don't see something, maybe you messed up the trade management, you know, whatever. But we are gonna correct it, you know, and you know, you're gonna know it, and you're gonna be able to improve faster. But yeah, pretty much you're gonna write emotional aspects as well. You can you don't need to, because it's backtesting, but maybe you're tired, maybe you're sleepy, maybe there are a lot of things. Maybe you feel that you want to take aggressive trades, and then tomorrow you feel that you want to be again. Feelings can be dangerous, so this is why it's okay if you write it also as well. Another thing you're gonna write is how much percentages you have won. So 3 plus, so you're gonna write plus. Where's the plus? Plus how much percentages? With 3.4, almost 3.4%. So you're gonna write plus 3.4%. So you're gonna know that this trade gives you 3.4%. If you wanna make everything a little bit better, but it's gonna require a little bit more time, you can mark the break of structure, make supply zone. I didn't, because I'm just looking at the video. So this was our supply zone, this candle right here, this low here, and this high here. Then you had your change of character here. This was your change of character, first change of character. You can do a little bit more, and this was your stop loss. You're gonna mark your stop loss. You can do all those things, but it requires a little bit more time. So if you have time, you can do it. So your charts are gonna look a little bit more cleaner. But again, if you do not want to do it, you just can do it like this. I'm doing it for this video because I don't want the video to be 3-4 hours long. So yeah, basically that's why I'm just clicking to the price and not marking anything. But if you can do it as well. But the important thing is to write a technical comment and write your total P&L. So yeah, let's see what happened next. Right now price action is broken highs and retracing. Right now we see the price action be a little more corrective, again breaking the highs, retracing. Nothing really interested that we want to take trades or something like that. Price action right now breaking the lows and retracing, making wicks here. So price action is being corrective, again breaking the highs, and we have this ascending price action. So when I'm looking at this right now, a standing price action, I'm taking to trade if I can see another reversal trade. Let's see, and here it is. So yeah, this is nothing. So the same candle basically pushed the price lower. It was showing us momentum, and then all of a sudden, boom, the same candle retraced all the way to this level, and then this bullish candle. I mean, this is even too aggressive for me as well. So nothing. So let's see, maybe we have something like here. So this bit of price action right now is not a reversal trade, it's more of a continuation. So you should watch out when you're gathering the data, when you're doing your SR, so you can mark everything correctly. So you're gonna see that you had an inside bar here, and this was our low. So with this first momentum, we broke this inside bar low. So this was our first reversal trade. And right now, after this retrace and price broke the low again, this is a continuation trade. So maybe when you're backtesting, you're not gonna see those things, and you're gonna think, okay, this is a reversal trade, and I'm gonna take trades on USD aggressively, reversal trades, and it's not a reversal trade, it's a continuation trade. So you need to watch for those things. Okay, let's see what price action did. Broke the low again broke the low, guys, here. So nothing really interesting that I want to trade here. You could have taken this trade, you see, but again, we broke the low, so sorry, it was not valid. Only double confirmation entry. So this would be good in double confirmation entry, but again, guys, I really do suggest you to not be focused on double confirmation entry when you're starting out. So start first with a hybrid entry and then move on. So let's see what happened. Price action coming back again on this continuation, but again, what price action is doing, it's forming volatility, same momentum to the downside, coming back to the upside as well. So going against momentum, never a good idea. Price action is breaking right now. So this is where I want to again look for trades. This is a reversal trade right now. So price action is putting in new lower lows in the market. So the structure is bearish. So again, when I'm looking at the AUD USD, I like to see something like this. You see the price action is moving like this, and then like this, and then it's reacting to supply and then making your lower low. And then we have this standing price action. This is where I want to take reversal trades to form a new lower low. And then I want to see another pullback, and this is where I want to again trade something like this, reversal trade to make a new lower low. So I want to see that price action is moving in this descending, and it's giving me this pullback and reversal trade to make a new lower low. This is something that I look for on AUD USD when I'm trading AUD USD. But this case, again, even though if you're in descending structure, I really like to trade reversal trades. So you see the price action moving in this descending, and it's showing us a little bit more of smaller descending here. So again, it's indicating weakness to the downside. So even though price action is in uptrend, we can still bank some profits if on this pullback. And then we take our shorts. Let's see. So nothing there was no reversal, guys, here, unfortunately, as you see. So I clicked it too fast. There was no reversal, guys, here. Price made a retrace and broke this high, so this was again invalid. So to trade from here, again, it's quite aggressive. If I want to trade continuations, I would like to see more of a pullback or the second candle, and then more momentum, and then I want to get involved here on a continuation. But I want to see clear impulse, correction, impulse pattern. And right now, as you guys can see, price just breaking the highs and immediately retracing, coming back to here. That's quite aggressive. As you guys can see, this is quite aggressive, so I would ignore this as a continuation. And we have right now double formation entry, and this is where I would maybe enter on double formation entry, really. So because it's still a reversal on double formation entry. So basically, double formation entry doesn't have a reversal or continuation, because it's breaking the highs and retracing. But as I said, I would be interested in trading a reversal here, because we have this bigger structure, bigger descending structure, and then we have this smaller one. The bad thing about all of this price action, only bad thing that I do not like at this point, is this bit of price action. It's really, really terrible. This volatility usually indicates a bigger correction, but I really do like this impulse. And this is again where we use double formation entry, is when we want to get involved, because our first thought was we want to get involved here in reversal for this pullback, and then price action is most likely going to continue this descending. But again, you can bank profits. This is your AUD USD. This is how it moves, how it likes to do things. So we would initially want to enter here, and right now, price has broken the high, and this is invalid. So only point that we are entering our trade from is from this order block here. But this order block was aggressive. This is why we refined the strategy, and this is why we are trading double formation entry. But again, guys, I'm gonna take the double formation entry because I really do like it, this reversal. And again, you can do whatever you want to do, but I really, really do suggest to not be focused on double formation entry at the beginning. So focus only on hybrid entry at the beginning when you're starting out. As you go on, you can go on always and backtest double formation entry. Okay, but again, I am just looking for the things that are better for you, so you can improve faster and move forward, and it's going to be easier for you. So again, hybrid entry at the beginning is really the way to go. So again, guys, when you're looking at your order block, when you're marking order block, you're wondering maybe why my order block is here. As you guys can see, we're looking at this kind of high, this kind of high, this kind of high, this kind of high. And we see that this incentive bar was lower. So this was lower. So this was not for us. This was not the beginning of the momentum. This incentive bar was lower. This week was lower. So this is why this incentive bar is our entry point. And usually our stop loss would be here on this wick right here. But because this is an inside bar candle, we are only refining. This is our basically strategy refinement. When you have an inside bar, you do not mark the wick on the right here like you usually are. If this candle was not an inside bar, you would mark it here. But because it's an inside bar, you're just refining the strategy, and it's basically give you a better stop loss and more risk reward if trade goes in your favor. So I'm not a fan, I can admit that I'm not a fan of double confirmation entry, basically, on AUD/USD. And this bearish leg was quite aggressive, so I think this is gonna finish in stop loss. But yeah, it's still considered as a reversal trade, and basically I know how the pair moves and what it likes to do. It's basically this descending structure, you know, you're putting in new lower lows in the market, putting new lowers in the market, you know, price action, putting in new lower lows in the market, and then you can trade here, you know, as a reversal to enter, and then take your profits here, and then trade here to take your profits here. So this is how AUD/USD moves. But let's see. Okay, and volatility, we had this volatility, almost got stopped out. So, and let me see, price broke this high, again broke this high, so we can manage our position. As you guys can see, there are no retraces in this momentum. Price action just breaking with every week, it's breaking higher, so we would manage our basically our stop loss here, and 2 pips below is still a full basically still full 1% stop loss. So we didn't manage to lock some profits here, so we're waiting for a retrace right now. Let's see, and here it is. So this is a retrace candle. This candle didn't broke the candle's high, so if right now if we broke the high, we can manage our trade. So yes, we did that. So as you guys can see, with this candle we broke it, so our stop loss would be on this low right here, and 2 pips below be 6.7%. Our stop loss is here right now, after below this low, so 2 pips below this low, somewhere like here. Not calculating everything exactly, but again, always the most recent low, and then 2 pips below most recent low, and price would tag us out of this trade. Okay, so again guys, you're doing the same thing. So you take this and you mark a technical analysis, emotional aspects, and overall P&L. 6.6 plus 6.65%. Is that correct? Yes, it is. So yeah, we move on forward. Let's see. Okay, price action is showing us that it's moving to the upside. Then we had a little bit of weakness to the upside, and then again, this is messy. Price action breaking above, retracing, breaking above, retracing, breaking above, again retracing. So you can see the price action is moving up, down, up. So this is an indication that price action is being corrective. It's most likely to continue to being corrective. So let's see. Okay, so this is basically what I'm talking about, you know. Price action moving in this descending price action. I think we're gonna break the low and make a new lower low here. So I would be interested in trading something here, and this is where we had a continuation. So I would take this continuation, guys. So even though it was a little bit more aggressive, and I personally do not like aggressive trades on AUD/USD, continuation trades. So we didn't have enough momentum here. Price was coming back from this massive price action. To consider this as a continuation is really aggressive, because we didn't have enough momentum here. Small retrace, and then again not enough momentum here. But what I liked is that we were reacting from this zone, and I know the pair, I know how the pair moves, and it likes to respect this descending price action, and it likes to break a new low. Maybe I'm wrong. If I'm wrong, I'm gonna take a stop loss. and that's perfectly fine. That's perfectly okay. But again, you can combine all those things, you know. So again, even though if I'm not trading continuation trades on AUD USD, sometimes I can even take them depending on the situation that I'm in. Maybe I'm gonna be on challenge. I'm not gonna trade the challenge and verifications the same. So I'm gonna have two different trade plans. Why? Because on challenge account, I have to make 10% in 1 month, and on verification account, I need to make only 5% in 2 months. So verification account is 4 times easier. I do not need to be as aggressive as I'm trading on a challenge account. So I can chill and make a 5% in 2 months. So this is why my trade plan is going to be different. My trade plan is going to be different on real account, because right now all of a sudden I do not have a profit target. I do not have a time limit. So again, also my trade plan is going to depend on the market conditions that we are currently at. So if the price action is moving in a trend, I want to be more aggressive. If price action is corrective in a bigger range, I want to be more passive. So this is, you know, you're going to have fixed trade plan, fixed rules that you're going to follow, but depending on the situation also, that can vary. Okay, so this is why I like this this trade. And let's say I was up 6% here, and I was up almost 4% here. I'm from the beginning of the month, this is the half of the month, I'm up almost 10%. I could be aggressive a little bit here, you know, because I have won a lot, so I'm above break even, so I can be a little more aggressive, even though I'm not trading aggressive trades, aggressive continuation trades on AUD USD. I know the pair, and I know that this can be a massive trade. If we start to break the low, I can bank another 8%, and I already have won 10%, so you know, 1% risk, it's perfectly fine here for me. So this is my thought process when I'm, you know, trading. So we didn't break the low, so we are not going to manage our position. We're just leaving the price action here, and this really doesn't look great right now. We are testing this in bar for the second time, and I think it's gonna fail. We have a big wick left behind and price action coming back in volatility, so it's most likely going to be a stop loss. Okay, I hate this. So if this happened live, I really guys, believe me, I do not have problem with stop loss. I do not have problem with missed trades. I do not have problem with anything. But the single most thing that I hate is this: when I enter a trade and then trade goes 2% in profit, break even. 2% in profit, break even. 2% in profit, break even. 2% in profit, break. I hate this, because either take me out of the trade or give me profits, and that's it. I do not want to, you know, this is how many hours of, you know, being in the trade it's not moving. I really do hate that. So yeah, that you can say that this is the thing that I really, the most single thing that I hate really the most is, this is why I don't like to trade ranges, because I cannot make money, bro. You know, I trade a range and then price goes 5%, break even, 5%. This is why I avoid trading in a range. So yeah, let's see what happened. And yeah, price took me out, perfectly fine. Again, I was being a little more aggressive right here, because, you know, I was looking at the nature of the pair and I had a little bit more of idea, and I was up. Okay, I was up here for, oops, I didn't manage. Here was, wait, it's like this. Okay, oh, okay, I didn't do this correctly. So this was more, wait, so our this was our entry and this was our stop loss, so it was, yeah, a little bit more, 7.32. Okay, so do you see what I did here right now? So I marked it correctly the first time, and then something happened. I misclicked it and I changed it a little bit. I don't know what I did, because I was talking, and so wait, here is our entry, exact entry, and here's our exact stop loss, and that's it, 7.35. Okay, perfect. So you see what I did? So if you're sometimes moving fast when you're doing backtest, you're not gonna see those things. and you're gonna have maybe a little bit more of false data. So this is why, again guys, when you're backtesting, try to be focused and try to do everything correctly, because I don't know what I did with the chart and I messed it up, and I just saw it like, this was not a stop loss, it was a good trade, and then I saw, so I really did type a lot false information here. So basically, so 7.332 here, a little bit more. So okay, that's pretty much it. Yeah, I made a decision that I want to enter here because I was having a logic that I want to trade this a little bit more aggressively, because you know how the pair moves. Even though the price action was, you know, a little more aggressive, not the kind of the continuation that I want to enter on, specifically on this pair, but perfectly fine. I was already up a lot of percentages here, so I could allow myself, you know, one risky trade. Why not? So let's see what happened next. Right now I do not want to look at anything before I see something really, really good, and maybe I have something really good right now. Let me see. So we have again the same thing basically. Only thing that I do not like here is the price action is moving in this descending ascending. So that usually indicates correction. And I forgot also to write here -1%. So I also do not like that price action is wicky a lot, weak all over the place, and I don't like that price action is being corrective, but I really do think that we're gonna react from this and price action is gonna melt down to make this lower low. So again, I would still take reversal trades here, and we have a reversal trade here, so I am going to take it. So again guys, because this is in bar candle, so you're looking at how you're marking your block, you're going through, and you're looking at where the move of this impulse began here. This is our lowest point, so these are going to be our entry, this is going to be our entry on this low right here, and usually we are marking this candle high when you're marking our block, but because this was an bar candle, this is an bar refinement, and we're only marking the bar candle wick. So if this was not an bar candle, we would mark it here, but because this is bar, this is small refinement, because again you're gonna reduce stop loss a little bit, and that means you're gonna improve your risk reward even more. So yeah, instant stop loss instant stop loss, guys, that's perfectly fine. Again, you know basically your risks when you're entering trade. I knew my risk because this was a little bit more correction, but yeah, I'm still up a lot of percentages, and I really wanna see price action, you know, making that new low, because I know the pair and how the pair moves. So this is the logic that I was, you know, looking at. So perfectly fine, -1%, part of the game. Let's move on. Price action just moving to the upside right now. Okay, so this is the kind of trades that that I do not take. So ascending price action making new highs in the market, have this impulse to the upside, and price action coming back. So there are a few things that I do not like about this trade. First, there is a weakness in uptrend. Second, I don't take continuation trades. Third, this is not clean continuation trade. So you do not have impulse, correction, impulse. You have only one impulse. So you have a standing price action and impulse. This is not good for AUD USD. This bit of price action is good for Euro USD, for example, because for Euro USD from this ascending moves to the upside. But for AUD USD, no, I like to see impulse, correction, impulse. And another thing, AUD USD doesn't like longer retests, longer pullbacks. So this is why I just do not want to look at this as a continuation. So let me see. And yeah, price action is making that low, but didn't give us an entry. That's perfectly fine. Again, guys, do not get triggered. Even though you were right and price action is going to move to make this low, and you had basically two trades, targeting that, and that didn't happen, and right now you do not have another entry point. It's perfectly fine. Hey, market, again, guys, is doing what it wants to do. You cannot control those things. I have done everything correctly. Where I had an entry and where I saw the opportunity to get involved, I took it, and that's it. Maybe we could took the trade here also as well, the same trade. Look at this. I clicked the price action a little bit too fast, and again, I warn you not to do that. So yeah, I have a little bit fear that this video is gonna be really long, because look at, we're in half of the video. It's like 15. We don't need to do the whole month basically, and that's why maybe I rushed a little bit. But yeah, I had again another continuation here. We had a flip. You're gonna see this demand created, and then price action breaking this demand right now. And again, it was risky, so we broke this demand basically with the wick and immediately retraced, and this is a continuation, and we didn't had impulse correction, impulse momentum. We had this descending price action, so it was a shit trade, and this was also a shit trade. But the only logic that I had trading this is that I want to see this low getting taken, because I know the pair characteristics of the pair, and I was already up like more than 10% on the month, so I could take a trade a little bit more aggressively. But again, if I was not up for the month, I would not take this trade, for example. So this was the reversal. So yeah, this was pretty fine. Not that fine, because again, price was a little bit messy. So yeah, these two entries are basically up to you if you would take it or not. So yeah, let's see what happens next. Again, price action breaking below, making a big wick, leaving a big wick behind, and right now price is like indicating that we're gonna see volatility. So we're not interested in trading volatility or something like that. Again, we're breaking the low and retracing. So nothing really special right here, guys. Again, I do not want to enter on continuations on this longer descending. I really do not care. And this is where I want to get involved. Basically the same thing. So the same thing as here. So price is following this descending price action, this longer descending, just made a new lower low. And right now we want to enter here in reversal to ride this pullback until somewhere here, and then we can expect another lower low creation. This is basically how I trade AUD/USD. This is how I like it traded. So let's see, are we gonna have an entry? We broke the high, so it would not be valid, or we didn't. When you're not sure if price broke the high or not, guys, you have numbers here. So you're gonna see this high was 77191, as you guys can see here, high, low. It says high, low. So you're looking at the high 77191, and this was 77193, and this was 11. So yeah, we did broke the high. So if we did break the high here and retraced, yeah, this would be a double formation entry, but same thing basically like here. So we would be actually taking it. Let me check to make sure. So we had one impulse, we had a retrace, then we had a second impulse, and we didn't break this high. So yes, this would be a valid double formation entry, but unfortunately we did missed it. You can see we missed it. Same exact thing, guys, the same exact thing like here, a reversal after the creation, new lower low, a little bit of weakness like here, impulse correction, impulse correction, impulse, coming back to double formation entry. But unfortunately we get triggered in here, but unfortunately price missed our entry here. So yeah, we have another continuation, guys, here. As you guys can see, impulse correction, impulse. Again, I do not like when I have multiple retraces in momentum on AUD/USD. For example, if we are trading Euro USD, it would not be a problem. But when I'm trading AUD USD, I'm a little bit more careful with those things. So let's see what happens. Again, coming back a little bit on volatility, and let's take these trades and make it a little bit more fun video. Why not? So yeah, basically the same thing, guys, like we did the trade here. So basically, price made a new low. Right now we can expect a pullback around here, and then from that point we can expect another low. This is how, again, AUD USD moves. So we have this reversal trade, price missed our entry, and then right now is continuing to push up. The bad thing about this trade is that I don't like to trade that much continuations on AUD USD, and we had multiple retraces in the simples. I do not like that. Okay. If this was Euro USD, I would rather trade this price action on Euro USD than AUD USD. But yeah, just for the video, let's go. Boo! Yeah, baby, let's go. Oh, big wick behind is always not a great thing. But again, we did broke the high, guys, so we are instantly managing our position. And we can see that our lowest point was here. So this wick right here, 2 pips below this low, and you're gonna see that we have already reduced our risk. And this is what I mean by when you win, you want to win big. Okay, this is why we're scaling the position. And when you lose, you want to lose small. This is why we're immediately reducing our risk when we're in the trade. So this is the completely opposite thing of average retail trader. Again, what he's doing when he's winning, he is fearful. And when he's losing, he's hopeful. We are completely different, cutting that bullshit and doing the right thing. So we have reduced the risk here. Let's see what happens. I do not like this wick. Usually when we see this big rejection, we see the impulsive move to the downside or something like that. Let's see. Are we gonna be? Yes, we have broken the high, so we can manage our trade, guys, here. So you can see that our most recent low was here, right here, and 2 pips below it would be our stop loss. So around 2.4%, around 2.4% stop loss. So yeah, let's see. We did had a scaling, we didn't, we missed. Okay, so miss scaling. Let's see if we had a scaling. We didn't have a scaling. As you guys can see, this was a scaling position on this inside bar here, and price barely didn't tag us in. As you guys can see, let me zoom in. So this was our scaling point, this inside bar here. After the price broke this high, again a little bit more aggressive, but again we have locked our profits. So look at this, just barely missed us. Perfectly fine. Again, part of the game, guys, it's gonna happen. So again, you're looking at where this was your new most recent high. You're looking at where was your most recent low. You're starting lower. You see this inside bar, 2 pips below this inside bar, and the trade is managed. So let's see what happened next. Are we gonna have a scaling position right now? Yeah, we have it. So we are definitely going to scale in position here. Let's see. So guys, again, you have your locked profits, 3% are locked. The worst case scenario that can happen in this position is that you lose minus 1% here and you bank 3% here. Worst case scenario that's gonna happen is that you're gonna still earn 2%. Worst case scenario. What is the best case scenario? Price react to this, breaking above and giving you 10% here and giving you 5% more here. So this is why, again, scaling is a must. So again, I do not like this bit of price action. I would rather only manage my trade here and secure the profits. But again, guys, I know what is my job as a trader. So I would rather want to see this bit of price action again on Euro USD, because again, price action is showing me this ascending price action. doesn't have enough momentum. And I know that those kind of trades are not playing out very well on AUD USD. I know that. And again, the same thing, I know that we are most likely going to react from this area. Do we push a little bit more or not? But we're most likely going to end up again pushing above, because this was impulse, and we're most likely going to break this low again, you know, based on the pair characteristics of the pair. And I know that entry is not the safest to enter here, but again, everything is legit. I have impulse, I have correction, I have impulse, I have a retest, and I have a mat behind the scaling. And I know that my job is to take a scaling here. I would rather want to see price action on Euro USD, but again, we are trading AUD USD and we are locked in profits 3%. And I know that my job is to take the trade here, because when I'm scaling in the position, I'm just looking at the math behind it, you know? So I do not care a lot about price action. So let's see what happened. And yeah, we just broke the high. So as you broke the high, we can manage our trade. So let me see this. This is a little bit, so we broke the high. So we broke the high here, and this was an INSEE bar candle or not. So as we have broken high, we would look where was our most recent low, and most recent low was here. Wait. So this was another retrace candle, and we broke the high. So this is why you need to look at every little detail. So we did break this high here, and our most recent high was here, right here, and our new most recent low was right here, because this was a retrace candle. So this would be this trade would be locked in profits for like 0.5%, and this would be locked profits in like 5.2%, and the next candle would take us out, unfortunately. So again, it doesn't matter, guys, if price action took you out or not, took you out for 0.5% or 2% or whatever. It only matters that you have respected your trade plan and you're following your rules. Okay? Again, you focus on the things you can control and ignore those you cannot. Price action can do whatever it wants to do, and you cannot control those things. So let's write 5 plus 5.2, I think. Yeah. And plus 0.5 plus 0.5%. Okay, that's it. We were out of the trades. Let's see what happens next. So basically the same thing right now, guys, here, and interesting month, really interesting month. So basically the same thing as we had here, you know. So price reacting and then pushing below, and it made me lose 2%, and it made a new high before continuing. So maybe that can happen here as well. Maybe I'm gonna lose right now 1% here on this aggressive continuation. Maybe price gonna make this and then do this, but I hope not. I really do not hope not, because basically I'm saying the same thing. I still earned money on this pullback here, so I can trade aggressive continuations here. Again, I do not want to, because I'm not taking aggressive trades. Okay, this is more than 6 pips. I'm gonna show you right now something. So when your order block is more than 15 pips on AUD USD, you're entering on 50% order block. So in this case, I would enter here and I would ignore this. So this would be my new stop loss, as you can see, 8.5. That's perfectly fine. Again, aggressive trades on AUD USD, aggressive continuation trade. But again, I know I need to take it. I have logic behind it, because again, I can take what happens if I take advantage of the move and I caught the whole move? I'm gonna be up massively, and I did earn money here. So even though I can let myself be a little bit more aggressive in this position. You understand? If I didn't make money for the whole month, take this trade, it would not be my trade plan. I would not take it because I'm not taking aggressive continuation trades on AUDUSD, and I can lose more than I can gain. But I already have gained a lot in this month, and this is why I can allow myself to take a little bit more aggressive continuation trades because I know the logic behind the move. So let's see what happened. Please, come on. Yes. So that's it. We were right. This was good. So let's see. We did break this low, guys. This was our most recent low, and as you guys can see, we had the NC bar here, so this would be our most recent high. Again, 2 pips below, above. So yeah, we would be like reducing the risk, but still we would have like 0.4 or something like that, 0.4% risk on the table. So we cannot look for scalings or anything like that because we have still open risk on the table. But let's see, we had a retrace right here, a new retrace. If price action breaks this low, again, we can manage our position. So let's see what happens. Come on, yeah. Price action broke the low, so we can reduce our risk right now. As you guys can see, this was our most recent low. We saw this first NC bar here. This was our most recent high. So from that most recent high, 2 pips, and we will see that we are already up 2.something% on this trade. And right now it's the time to scaling, guys. Again, when you are in profit and when you're winning, you want to win big. So this is why we're gonna take advantage over the scaling. Let's see if we had a scaling. So right now, still not. Price didn't tag us in, as you guys can see, barely. Unfortunately, this is not gonna take us. Maybe. Let's see. Let's click to the price. No, come on. Whoa, barely didn't took us out. Okay, let's see. Okay, so I would get really nervous if I traded this live. Okay, so this is the kind of situations that I really do not like. When price action is again coming back in profit, coming back on break even, on profit, break even, profit. But yeah, at the end of the day, we have broken. It did give us scaling position. So again, we have scaling position because we were up 2% on the trade. I already explained everything about scaling. That's clear. So we have taken the scaling, barely didn't took us out, and broke the low. So our new low would be here, guys, and our new high would be right here. So we would manage our trades right here. This would be like 1.7%, and this would be like almost 4% locked in profits. Let's see what price action wants to do next. I do not like this wick. Where was this low? Let me just mark it here so I know where the price action is moving towards. So we have left this wick. So usually what we see after this wick is big volatility, and I would not like to see big volatility because price would take us out. Let's see. And we have broken the low. Perfect. So again, looking at this low, where was our most this was our most recent low, where was our most recent high? As you can see, this was the NC bar candle. So this was a retrace candle. This would be our high. First trade would be running for 9%, and the second trade, the scaling trade, is 10%. Look at this. Look at this. So this is the power of scaling, guys, what I'm telling you about. So our first trade is running for 9%. Our scaling position is running for 10%. double and a little bit more because the stop loss was a little bit smaller. But again, guys, this is the power of scaling. If you were scared of profits and if you're scared to take advantage, you would be out of the trade for a long time ago. First of all, you would be out. You would have a profit target and you would be out. But again, we do not have that. We do not use that. We are letting basically the system, the price action the price action is deciding for us where are we getting involved and where are we exiting the trade. We do not make that decision. And again, this is the power, why this strategy is so powerful, because you do not make your decisions on your own. You're not allowed to make those emotional decisions. Price action dictates everything. Price action shows you, basically makes decisions for you. This is why this is really, really, really powerful. And look at the again, example of scaling, how powerful the scaling is. So with the second, entry, you're winning even more than the first one. So if you are scared of the profits, you would be earning like only 9% here if you didn't close the trade early. But because you're not scared of profits and you know that you're doing things differently, and when you win, you want to take advantage of that and win big, this is going to allow you to earn almost double every movement. So let's see what happened again. We would take a scaling here. Sorry guys. So we really do not care about the price action right now at all, because we are up, locked, not up. We are locked 10% and we are up like in this trade 15%. This trade is running for 50% and this trade is running for 12%. But again, we are locked at almost 20%. And of course we would take a scaling position here aggressively because we really do not care. And we have still room for this new lower low creation. And this would be a stop loss, immediately stop loss, and it's perfectly fine. So this would be minus 1%, do not feel a thing, minus 1. And this is position, this was 9%, plus 9. And this is plus 10.2%, sorry guys, plus 10.2%. So again, you have made almost 20% here. What is 1% here? Nothing. Okay, so let's see what happened. Price didn't broke the low, as you guys can see. And right now we are having another reversal trade. So let's see how many pips is this. 13 pips, so perfectly fine on AUD/USD. Again, guys, this is basically the news pattern that we're trading. So we call it high probability news pattern. You're gonna have an impulse to the upside, leaving imbalance behind. You're gonna have correction, impulse, correction, impulse. You're gonna have this weakness in the market price, breaking the highs, retracing, breaking the highs, retracing, breaking the highs, retracing, weakness, boom, reversal, and you're gonna enter here to fill this imbalance. So this is the high probability news pattern that we are trading. I'm gonna take the risk here of trading this, but we have broken the low, so this would be not valid. This is right now invalid, and again we broke the low, so even double confirmation entry is not valid. And I think we are almost right now we're broken this low. Okay, so we are almost done. This is the 1st February. Let me mark it so I know where to stop. So 1st of February. Okay, so let's see what happened. We have this okay, descending price action, and right now we're again breaking. So let's see if maybe we're gonna have a reversal for the end of the month. And this is longer pullback that I do not like to take on AUD/USD. Let's see if we're gonna have it. No, we're breaking the highs. So basically nothing until the end of the month, guys. Okay, so right now when you have finished the month, you're basically gonna do this. So you're gonna see where the month started. So it was right here. So you're gonna mark the beginning of the month, you're gonna mark the end of the month, and then you're gonna write everything down here. So you're gonna write how your total trades. So you're gonna write AUD/USD. This was first 2021, I think, if I'm not mistaken. And then you had total trades, trades. Total trades you had, you're gonna write down 1, 2, 3, 4, 5, 6, 7, 8, 9. Total trades 9. Then you're gonna write how many winners you had. 1 winner, second, 2, 3, 4, 5, 6. 6 winners. Total win trades. Six. Total losing trades. 3. So we had a lot of winning trades here in this month. This was pretty good month. So usually you're not gonna have this much good risk reward. Sorry, win rate. So usually win rate, but also it's gonna depend on how you trade, guys. So maybe, you know, if you trade only high probability trades, yes, you're gonna have you can manage to have 60% win rate, you know. But if you're trading, you know, a little bit more aggressive or a little bit more average on the average side, you're gonna have like 40% win rate. 40%, that's perfect. I believe me, that's perfect, because you are having a big risk reward, and when you have a big risk reward, you're gonna compensate that. So you see that all the trades, you know, we're managing our position, we're extracting a lot, we're taking a scaling position. So basically one trade here can compensate for the whole month for a lot of losing trades. You know, if you're risking 1% and you're also reducing the risk on a lot of trades, you know, this is why, you know, when you hit one trade, it's going to compensate all of that. But again, it all depends on your trade plan. I usually do not have a 60% a win rate, you know. Overall it's a little bit less, but a risk reward is too big. So yeah, I think that 40% is something that you should aim for. Again, if you're a more conservative trader and you want to take less losses and take more high probability trades, then yes, you can take that number maybe on 60%. So total losing trades 3, and then you're gonna write total P&L. So total profit and loss, and yeah, you can just do the calculations. So let me do it right now quick. So you're gonna write down, so let me open my telephone. So 3.4% first trade plus 7.32 plus 5.2 plus 0.5 plus 9% plus 10.2%. So we had 35%, 35.62% plus and minus 3% in 3 losses. So our total profit and loss here was 32%, 32.62%. It's crazy for 1 month. It's really crazy for 1 month, and you actually, guys, really do not need this much. Okay, so again, you never set a profit target on yourself. So I need to make 10% a month. Whatever market gives you, you're gonna take it. You're gonna have months you're gonna see when you're backtesting. You're gonna have beautiful months like this, when you're gonna have a lot of trades, and when the market is going to give you a lot of percentages. But you're gonna have months the market is corrective, the market is volatile, when you're not gonna have, you know, anything to trade. And again, the most single important thing is to recognize those things and adjust your trading accordingly. So if you see this, something like this, you want to take advantage of it. You want to trade, because this is where you earn money. And when market is corrective and ranging, you want again to recognize that and adjust your trading accordingly. You want to take only high probability trades and focus on protecting your capital. Because again, there is going to be a big difference between you and other traders, because other traders are not looking actually at that. And they're going to basically have the same trade plan in all kinds of markets. And the corrective period is going to come and they're going to lose minus 10%, But you are not going to lose 10%. You're going to see when you're doing your backtest, you're never going to have a month when you're finished the month in minus 10%. It's impossible, I think, if you're doing everything correctly. You're going to have -2, -3%, that kind of months. And when you have a good month, you're going to have boom month, crazy month. So this is what is important, to recognize those things and adjust your trading accordingly. So when the market is corrective, you want to focus on protecting your capital, not risking it. And those are the months when you're going to have like break even or minus few percentages, not something big like minus 10%. And when you win, you're going to have a good months where you're going to have a 10% or 20%, 30% months like this. So basically this is the process of doing backtesting, guys. You're going to do that for every single month of the year. You're going to do the 3 years of data on every single pair. You're going to do the pair for 2 times all the years. First time when you're backtesting, you're gathering data, doing your ASR, making a trade plan. Then with that exact same trade plan, you're coming back and backtesting the same years, same pair for the second time. But right now you're not taking anything to gather data. You're taking entries only with your trade plan. So you're going to see, you're going to have a lot more success rate, win rate, everything like that. So yeah, that's pretty much it, guys. I do hope that you have enjoyed watching this video. I hope it was not too long. And yeah, that's pretty much it, guys. Again, if you have any kind of questions, just shoot us a message in community on DM me privately, and I'm gonna be more than happy to answer. So yeah, have a nice one and see you in the next one.